I'm Selena Wang, in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, China temporarily banned sales from U.S. chipmaker Micron, cutting off the world's biggest semiconductor market as trade tensions intensify. Plus, as we approach the midterm elections here in the U.S., the fake news fight rages on. What can platforms do to control misinformation? And we take a closer look at Facebook's challenging rollout of new ad rules. Why is there confusion, and could it have an impact on the social network's revenue? But first, to our top story. The continued struggles of chip makers trying to do business in the world's largest market for semiconductors. A Chinese court has temporarily banned Micron technology chip sales, cutting it off from the Chinese market. 26 Micron products are at risk here, including dynamic random access memory and NAND flash memory chips. Now, this all stems from a patent case where United Microelectronics took legal action against the Idaho-based company back in January. Joining me now to discuss is Bloomberg Technology's Ian King, who covers the chip industry. Now, Ian, analysts are saying that the impact of this is just a minor blip for Micron, but China did account for more than 50% of its revenue last year. So what are investors thinking here? Is this a buying opportunity, or are there still concerns?
Yeah, I mean, what we had was Micron actually come out and put a public statement in response to what had been said in China. And what it said was, yes, we've received this order from the court, but when you look at what the patents cover, they don't cover the fundamentals of our technology. They cover just some ways of packaging it and selling it. So it's a relatively small percentage of our revenue that's at stake here. That's their argument, and that's being seized upon by those who like Micron's stock and like Micron's performance, and saying, hey, they're safe, at least on this particular issue.
Now, this intellectual property dispute has been going on for quite some time, but can you attribute any part of this decision to the broader trade disputes between the U.S. and China?
Yeah, I mean, Micron was pretty forthright in what they said. They said, look, China is out there saying that, China is a fair place, that it treats U.S. or foreign companies fairly and guarantees their rights, and then it's doing this. So clearly they're implying that there is an implication with the broader environment, that they are a pawn in this situation that we're seeing unfold.
Right, and there are so many companies that have been caught up in the midst of these political tensions. I mean, you've got Huawei, ZTE, China Mobile that are all seen as security risks here, not to mention the Qualcomm NXP deal is still up in the air with Chinese regulators. So where does Micron fit into all of this?
Yeah, I mean, it's still right in the middle of this, unfortunately, for Micron and its investors. As you remember, Selena, Micron is not only embroiled in this particular case, but it's also the subject of an investigation by Chinese antitrust regulators. They've raided its offices in China, they've raided Samsung, and they've raided SK Hynix, its competitors. And what we think they're looking at there is price fluctuations. Basically, China is a huge market for memory, does not make any memory chips itself, and it doesn't like the fact that we've got these giant imports coming in at a huge expense. These companies are doing very well, making a lot of money, and China now wants to have a look at that.
Right, and against all of this is a backdrop that China wants to build their homegrown semiconductor industry. How does Micron and this whole situation play into that?
Yeah, I mean, that's a very good point. China is out there saying, look, we're going to spend hundreds of billions of dollars to boost our industry. This is a very important industry to China. Semiconductor imports actually cost it more than it spends on oil, so it really wants to do something about that. The memory chip industry has really been a thorn in its side for a very long time. They've tried to get in there for more than a decade and really failed. In that time, that market has concentrated into Micron, Samsung, and SK Hynix, and it's really looking like it's putting pressure on those companies to become more cooperative, to help alleviate some of that massive amount of money that's outflowing from China to these companies.
All right, Bloomberg Technology's Ian King, thanks for all of your hard work reporting on this. Now, the semiconductor market isn't the only source of tension between the U.S. and Beijing. Amidst escalating tensions, the U.S. dependence on Chinese tech is coming more into focus. America imported nearly $156 billion in advanced technology, information, and communications equipment from China in 2017. That's an almost six-fold increase from 15 years earlier. Our next guest is intimately familiar with tech coming from China and other parts of Asia. David Chow is the co-founder and managing partner at DCM Ventures, a firm with $3 billion under management across 325 companies in the U.S. and Asia. David, thanks so much for being here.
Hello, Celia.
Now, sticking with this Micron situation, you're invested with a lot of Chinese companies. You've been a longtime investor in China as well yourself. So how are Chinese investors looking at the U.S. market as a place to put their money amid all of these political tensions? Has anything fundamentally changed?
Well, Selena, there's four things going on all at the same time, which is fairly unusual. We have the Trump tariffs, the first one. Second, you have CFIUS, which is the government really double-checking any Chinese company buying a U.S. company in a very rigorous way. The third is the sanctions, the whole Qualcomm, and then also now ZTE and now Micron issues. And then the fourth is, China also doesn't want a lot of the RMB to be flowing into dollars, but they want to control that. And so what you're seeing is the confluence of these four forces all happening at the same time. And it's creating a situation where, it's much more difficult for Chinese investors to invest in Silicon Valley.
And when you're talking with investors in China that you could potentially co-invest with, what are they saying? Are they deprioritizing the U.S. as a market?
Well, I would say that for sure the second-tier financial institutions and tech companies have largely slowed down their investments in Silicon Valley. The first top-tier, companies like Baidu or Tencent, still have some ongoing activities, but compared to a year and a half ago, it has slowed down.
Okay, and now in terms of the Committee on Foreign Investments in the U.S., CFIUS, which you mentioned earlier, this could actually stop specific minority investments from Chinese VCs. Are you concerned about the impact of that on the deal-making landscape in general?
Well, first, for us, DCM Ventures, we get 99% of our capital from U.S. and Europe, so it doesn't really affect us. But I do think, some startups do have to worry if the new backers have Chinese government money. They need to be very careful, and also. There's no question that the CFIUS is slowing down a lot of M&A activities, particularly around semiconductors and core technologies that a lot of Chinese companies have been coming to Silicon Valley and buying.
Right. I actually spoke with several entrepreneurs recently who are worried about this chilling effect. They say raising money is already difficult enough for a startup, and if there's a chance that your money is going to be rolled back by CFIUS, they just don't want the money at all. I mean, what's your take on that? Well,
first of all, CFIUS only kicks in on an M&A situation. So, there is a possibility that you take in money now and maybe, you actually have those Chinese investors sell out in a secondary before a merger. That's possible. But on the whole, I do think that particularly, we're not really talking about these, mobile application companies. We're really talking about hardcore semiconductor, AI technologies that really need to be careful.
Now, looking at the actual numbers in terms of Chinese investment in the U.S., it actually has been falling to the lowest level seen in 7 years. That's according to the Rhodian Group. Now, there's a few things at work there, as you mentioned. There's the domestic Beijing capital control policy, regulations here. Do you think that trend is going to reverse itself anytime soon? And where's all that capital going instead?
I think given the tension right now with the U.S. and China and with all these confluence of tariffs and sanctions, I do think that this situation will probably continue until many of these tensions have resided. I really think that we are walking into a precarious situation.
And do you think that a lot of Chinese companies are looking at U.S. expansion in a different light? It seems like Alibaba and Tencent have been refocusing a lot of their attentions to the China market, Southeast Asia.
Well, I think the companies that already bought properties in the U.S., like Wanda buying AMC and then Tencent buying a few game companies, I think they are committed to the global expansion because at the end of the day, for Chinese companies to grow beyond their domestic market, U.S. is a very important market to them for the globalization strategy, and so that will continue. I think it's just that the entry point has been, shrinking a little bit over the last few years.
And now one of the key concerns of lawmakers is this intellectual property theft, forced transfer of technologies. When you're helping U.S. companies expand into China, have you ever come across those issues?
Not very much. I think for startups, they are in a situation where they want to, sell their technology, as many ways as they can. And because they're still very small, it doesn't come up on the government radar very quickly. It's really only when they become large public companies that it becomes an issue.
And so using Plenty as an example, that's a company you've invested in.
Sure.
I've been covering them for more than a year.
Yeah.
They are US-based, have a lot of IP to protect in their vertical farms, but they're looking at China as one of their biggest markets. So how does a company like that approach expansion into China while protecting themselves?
Right. I think there's many ways. One is to potentially go into China through Hong Kong, where in Hong Kong, both the laws and the business laws and currency exchange is a little bit more fluid. I think that's one way to go about it. And then the other route is to find the right partner. I think when you find the right partner who has a track record of having very clean, IP issues, they are good players. Now, of course, there are some bad players in China, but there are really good role model type companies that we can work with to expand into China.
And looking at the bigger picture here, do you think we're entering a world where the China and U.S. tech markets are increasingly closing themselves off from each other, creating these sort of parallel ecosystems?
That kind of a sandbox already existed. For example, Facebook, can't really practice in China, and it's certainly have been going one way. I think what's interesting now is, does it go two ways? And if it goes two ways, does the war escalate? We don't know yet. But certainly, the Chinese market from a startup perspective has been a sandbox that's been relatively protected. And the question is, will it continue to be? And then vice versa, will U.S. create a sandbox against Chinese investors? And obviously, CFIUS process issues is one of the many ways in which U.S. is creating that sandbox.
All right, David Chav, DCM Ventures, thanks so much for stopping by.
Thank you, Selena.
Now, sticking with Chinese tech, Chinese telecom manufacturer ZTE has appointed a new CEO. 20-year company veteran Xu Ziyang replaces Zhao Xianming. ZTE also replaced 3 senior management positions as it works to meet conditions in a deal it struck with the Trump administration to end restrictions placed upon it. ZTE already agreed to pay a steep fine for violating sanctions on exports to Iran and North Korea, and then lying about it. Now coming up, civility versus fake news. How one digital news platform is trying to enlighten the online discourse. That's coming up next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. The advent of the internet has turned the news business on its head. From outlets striving to maintain subscribers to ever-shifting business models and to the recent explosion of fake news. But with both publishers and consumers decrying fake news, nearly 60% of Americans believe that freedom of information should be protected at all costs, while only 40% think the government should intervene. But when you ask them if tech companies should stop fake news, that number jumps to 56%. And one digital-only news outlet is trying to figure out its space amidst all of this. NewsPicks is a social news aggregation app that it says is a place for civil and thoughtful engagement. It claims more than 3 million users and says half of its revenue comes from paying subscribers. And its parent company, Usabase, just bought another digital-only news platform, Quartz, for somewhere between $75 to $100 million. Joining me now from New York, NewsPicks CEO Ian Myers. Ian, thanks so much for joining us. So in the post-aftermath of the data privacy, fake news issues, I've seen a lot of startups try to position themselves as the antidote to the ills of Facebook and Twitter. What makes NewsPicks different?
Right. Well, I think it's important to first look at the problem. So what is the issue behind all of this uproar around data privacy and things like that? And I think the biggest single issue is the black box algorithms that Google and Facebook and all the rest are using to control and distribute the news. And so what we're doing is bringing that control back to the people, back to our users. So we have people, both our normal users and also our experts, picking the news, and everyone can follow each other and see what's being verified by our users, not just some algorithm that we don't know how it's coming to display what it does in our feed.
So what makes you think you can survive when the tech giants are rapidly copying the inventions of startups? I thought Twitter's recent product rollout was pretty interesting in that it's taking a step towards more verification and curation and having experts' tweets appear next to breaking news. What's your take on that?
Right. Well, I think the fundamental issue for both the publishers and for the social media and the social network sites is they're built to do things. So you see Twitter going into news, you see LinkedIn going into news, but that's not their bread and butter. The infrastructure of their entire companies are built around being a social network. And for the publishers, they have the same issue. They're publishers. That's what they do. They make content. They're not great at galvanizing community. They're not great at creating that social aspect of it, but people need that in the age of social networks. So what we're doing is, because we started from the ground up, focused on creating both a community and a strong contents team, we're able to combine the two that the bigger competitors are not, and build a business model on top of that that we think will last. And it's been proven in our Japanese counterparts.
But it's very hard to police the internet, and once any social media company reaches a certain size, they start to deal with trolls and toxicity. How are you planning to deal with that when you get to that size?
Right. So I think the fundamental thing that creates trolls is the ability to talk to each other on the internet. I think that's one of the biggest problems that a lot of the comment sites, or the commentary sections of these major sites, are dealing with, is once you're able to talk to users, your focus goes away from the issue at the top and down to the other users. On NewsPicks, you're only able to post your commentary once. You can leave your thoughts. You can't tag people. You can't reply to people. You can't do anything else. And so if you're a user, you get to browse interesting perspectives, but you can't start fights, you can't thread comments, and I think that protects us from a lot of the issues that you'll see on Twitter or Facebook, LinkedIn, Reddit, etc.
Now, your parent company, Usabase, recently acquired Quartz. So what is that integration going to look like? One report said that Quartz would actually be running the U.S. business of NewsPicks.
I think, there was a lot of media coverage of the acquisition earlier this week. It's important to focus on what our chairman, the founder of NewsPicks and the founder of Usabase, is saying, which is, the purpose of acquiring Quartz was to leverage their strengths to make the NewsPicks platform in the U.S. stronger. We are a business that is incredibly good at building communities and creating a platform. Quartz is a business that is incredibly good at specialized content, excellent journalism, and we're going to be bringing those two together, hopefully, to create a mutually beneficial business for both.
So NewsPicks was first launched in Japan, where it has this paying subscription model. Are you exporting that model here, or are you thinking about maybe an ad-supported business?
In Japan, they have both. So there is a high-quality branded contents component. There is also a subscription revenue component. We believe you can't rely entirely on advertising, which is a mistake that a lot of the new digital media companies have made. Instead, you have to build a loyal subscription base. So we'll be doing both in the same way that our Japanese counterparts succeeded.
Now, Facebook insists that it's a technology platform company, that it's not a media company, but it does host a lot of content, it curates it. It seems to be a pretty fine line. Where do you stand on this?
Where do I stand on Facebook's position as a media and a content company?
Versus being a technology platform versus being a media company.
I think it depends on what your purpose is as a business. So if you're a technology company that is designing your business model around publishing, around media, and around content, that's what you should be, and that's what you should focus on. Facebook, they've gone through lots of cycles. They've released plenty of products, new marketplaces, new things like that. And the reality is they're trying to be too many things to too many people, and so they can say they're a media player because they have media on their website, but as we can see, it's not providing an optimal user experience for anyone looking to find their news and understand why it's relevant.
Now, we all know that misinformation, flows faster than real information on social media. So who is responsible for stopping that? Is it the government? Is it the platforms themselves? Is it the user community?
I would say that the bigger issue is media literacy. So what's most important right now is for our media consumers across the country, and this isn't just happening in the U.S., to understand how to read news and verify whether it's real or not on their own. That's a long-term solution. It takes a lot of government planning. It takes a lot of grassroots planning. In the interim, the tech companies need to do more to control the spread of fake news on their websites. But unfortunately, when their business model is built on views, it's difficult for them to try to do anything that will stop more people. And fake news is attractive. People click on it. It's good for them.
All right, NewsPick CEO Ian Myers, thanks for joining us, and I look forward to seeing how the company grows. Now coming up, Xiaomi prepares for its IPO. While it's expected to be the largest public debut in Hong Kong in years, early signs show weak demand. Details up next. This is Bloomberg. Some stories that we're watching. The debut of Xiaomi shares is off to a bad start, and the stock doesn't even start trading officially till Monday in Hong Kong. Some institutional investors say gray market bids for Xiaomi shares were at times more than 9% below the issue price. Investors have been abandoning Hong Kong equities because of concerns over a US-China trade war. The European Parliament rejected proposed changes to copyright rules that could have made major internet players, including Google and Facebook, legally liable for content that users upload to their platforms. That proposal now returns to lawmakers for more amendments. The committee had supported new EU copyright rules that could force web platforms to actively filter out copyrighted content from users' uploads. That is, if rights holders don't grant them a license. And Amazon plans to publish a holiday toy catalog in a drive to win the business, up for grabs after the demise of Toys R Us. That's according to people familiar with the matter. The printed guide will be mailed to millions of U.S. households and handed out at Whole Foods locations. Amazon has become a toy shopping destination in its own right, steadily gaining market share in the last few years. And coming up, AI and voice recognition technology is being used for home assistance. But could it be used for national security? We'll speak to one startup working to do just that. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. This is Bloomberg Technology. I'm Celine Wang here in San Francisco. AC Global Risk is a Silicon Valley-based startup using voice recognition technology in ways it hasn't really been used before, screening large groups of people for possible security risks. It's gotten the attention of the defense community, former U.S. Secretary of State Condoleezza Rice and former Defense Secretary Robert Gates. They're both advisors to the company. Co-founder and CEO Alex Martin joins us now to discuss. Alex, can you explain exactly how this technology works and who your target customers are?
Sure. Let me put this in context. What we're doing here is imagine a large group of people with issues that you're worried about specific to risk. So what we're able to do is work with our customers to derive specific questions. We automate those questions. We have a globally networked platform that delivers these automated interviews. Individuals take these interviews over the telephone from anywhere in the world in any language. It takes about 10 minutes, and we process those results against our algorithm, producing a risk report. So we're essentially delivering risk assessment as a service.
So you're saying that based on the way I talk, my intonation, sound, inflection, that you can figure out if I'm a risk or not? I mean, how accurate is this?
Right. So what we're looking at is very specific but subtle changes in the voice that we're able to read very accurately. And we're not looking at what you say. We're just looking at yes and no responses. And those responses are what we measure, producing that report. Think of like a blood pressure reading from low to high. We're measuring those responses from low to high and essentially triaging risk on that spectrum for our customers.
And how does this differ from a traditional polygraph or lie detector?
Yeah, sure. So we exist way out in the front of the ecosystem of risk. So where there's a lot of people and you just need to triage and identify where to start. It's the concept of data being fed to experts, human-machine teaming, the ability to have data to then use that to do that credibility assessment. So we exist on the very front end of the spectrum, identifying risk, providing indications and warning of risk. The person at the end, the lie detection will happen, the expertise, the tradecraft of professionals, fraud detectors or in the military, counterintelligence professionals, they'll do that back-end work with polygraph and other technologies. We're on the very front end of just doing the risk identification.
I see. So now I'd love to get an example of a real-world situation where it's been applied. In particular, this fascinating case in the Philippines where apparently your tech helped identify employees behind this $15 million fraud.
Sure. So wherever there's human risk involved, that's where we like to play, specifically with identifying. In this case, in the Philippines, they had a problem across thousands of miles of supply chain, identifying who was involved in the theft of oil. We were able to go in, screen a large volume of people, and identify where there might be risk present that was unknown to the customer before. The lead investigator was able to zero in and get a confession and essentially find where that fraud was happening. So the idea of that data coming very quickly to the expert to make a determination of where that was happening. And that was just one case of many that we have that's really exciting.
So intellectual property protection is another big concern of companies. Has your technology been able to help on that front in terms of screening individuals who might be at risk of committing those types of actions?
Sure. So we spent the bulk of our time getting validation in the market, specifically where we come from in the special operations world. And now we're at that inflection point to go into market. And it is something very exciting to be able to know that we can go and help in that IP protection space, counter fraud and so on. These are kind of where we're headed next. Where we're at now is in the market commercially with some really exciting users who are using for applicant screening, fraud protection, investigations, due diligence, and in the government space, in the special operations world, helping feed data to experts to make better decisions in places like Afghanistan.
Now, what about, well, first I want to hear, what are you doing in Afghanistan right now?
Yes, we have a really exciting multi-phase pilot with innovations group from U.S. Special Operations Command called SoftWorks, sponsored by the Doolittle Institute. Spent a lot of time validating our technology because when people hear about this, the biggest issue that they have is incredulity. How does this work? How can I believe it? Spent a lot of time focusing on getting that believability, rendering our technology with greater than 97% accuracy, no false negatives. And again, we're playing, it's important to say, we're playing in a context where risk exists holistically. Multiple data points, feeding a human being who levies judgment, right? So machine is doing the data and the prediction. Human judgment, right, is doing then that feeding into the decision. That's what we're doing in Afghanistan right now, in places like Uganda, doing counter-poaching and counter-threat financing work for the Ugandan Wildlife Authority. A lot of really cool examples in austere rural environments where there is no other data to help drive and increase security and safety.
What are some potential ways that your technology could help solve this intractable immigration issue in our country? Are you working with, for instance, immigrations and customs enforcement right now?
So I think we'd be a large part of that solution. And again, it's got to be holistic, it's got to be multi-layered. And if you remove the political charge from the issue, what you have here is you have a country of immigrants that needs good, robust legal immigration to continue to prosper. We also have an increased security threat. So there's a tension, and there's individuals on both ends of this side of this equation. Where we would come into play is screening people very quickly, non-invasively, without bias, allowing them to accelerate through a process. Then identifying a small portion of that population who present risk for those experts to make a determination. Again, using human judgment, morality, values, law, to make a decision on if this individual does in fact pose a risk. So that's where we'd play on this immigration issue. The idea is bridging the trust gap, accelerating trust, and building secure bridges that are connecting people in this time of uncertainty.
And now we're at a time when tech companies are being scrutinized more and more for any potential weaponization of their technology.
Sure.
I'm sure you've been following Google coming under fire for the Project Maven. You have Amazon with its facial recognition being used in police forces. Yeah. Where do you stand on all of this?
Sure. So we stand in. We have no PII associated with any of our technology. How we roll this out and are used by our customers. Effectively, we are using this as a force for impact and for good to increase in the trust sharing economy, right, where things are outpacing frequency of interactions and relationships. There's a gap between trust. and the pace of that technology. We want to help accelerate and continue to accelerate that by bridging that trust gap. So that essentially is weaponizing this for a force of good, getting people jobs who wouldn't otherwise be able to have jobs because they look a certain way or from a certain region, identifying risk where it would have otherwise gone unnoticed. So in this case, what we're doing is aligning with our customers the value prop of we can all hold hands and agree that these things are bad, and let's come together and get data to inform better decision making, to scale your business, enter new emerging markets, and really be a force for good.
You were in the military for almost a decade. You have Robert Gates, Condoleezza Rice as advisors. When you look at where this technology is going and all of the potential applications and ways for tech firms to make money, what's your #1 concern?
My #1 concern is impact. We have to be able to take this new technology, and again, this is something new. We're talking about an innovation of the voice. It's never been done before, and we're not iterating on the candlestick to get the light bulb. This is something brand new. How we apply it is going to be very important, both in the government sector to move the needle on immigration and national security, in the business sector to move the needle on fraud, applicant screening, IP protection, and in the social space, how people can get jobs and move without traditional forms of security, passports, et cetera. So our #1 goal and how we think about everything is with respect to our impact and how that impact can be driven through with this new innovation that, again, is used holistically and in an integrated fashion with other technologies.
Now, you also work with big tech companies like Facebook, Apple, Palantir. What do you do for them?
Right, so we help a lot of companies screen people that are in the security space for them. So individuals that are in high visibility situations, we help screen those people for risk to ensure security and safety across the enterprise from a security standpoint.
Fascinating stuff.
Yeah.
All right, Alex Martin, CEO and co-founder of AC Global Risk, thanks for taking the time.
Thank you, Selena.
Now, in the first half of the year, more than $760 million in cryptocurrency was stolen from exchanges, almost 3 times more than in all of 2017. This according to a report from blockchain security firm CipherTrace. And there's a lot of money on the table for potential criminals as well. The current market value of the top 100 cryptocurrencies is around $270 billion. Now, coming up, we'll hear from London-based VC Highland Europe. Where are they looking for tech startups in the region, and is the VC landscape getting too crowded? This is Bloomberg. Highland Europe has previously invested in video game developers, e-commerce platforms, and companies producing software for industrial businesses. Now it started a new fund to target more growth stage European tech firms. Bloomberg's Caroline Hyde caught up with Highland Europe partner Stan Laurent in London to discuss the fund and the current VC landscape in the region.
What Highland does is back growth companies, so companies growing 50 to 100% that already have revenues and have already proven that their product was generating demand, but want to really scale up. And we put tickets of 10 to 60 million behind those companies to really bring them to the next stage.
And you're not vertical specific. You could be an e-commerce business, you could be a B2B commerce business. It doesn't really bother you.
That's right. We've backed in the past companies like Mattress Fashion, which you may be familiar with in the luxury e-commerce segment, but also a software company doing artificial intelligence in credit card transactions, for example. So we cover a wide spectrum, both B2B, SaaS software applications, and B2C consumer businesses.
Is there anything that Europe's getting really right at the moment? Are there particular areas that you think are more exciting than others?
Well, I think the recent track record shows that the whole space around fintech is certainly very lively in Europe. But I think it's not limited to that. I think a lot of European companies generally get international very early on because they have to. And that's a huge advantage for the companies we back. We invest across Europe, Germany, UK, France, and rest of Europe, in fact. Leading companies that have that global ambition. And we think the fact that the DNA is formed early on around, a global proposition makes a big difference.
UK, Germany, France. So I'm thinking Paris, I'm thinking Berlin, I'm thinking London as clear hubs. But where else are you seeing really bringing forward talent and exciting businesses?
Well, there's so-called STEM talent everywhere in Europe these days. And in fact, there's, contrary to what people think, there's more in Europe than there is in the US. There's about 250,000 more STEM graduates in coming out every year in Europe.
But then are they leaving to the US?
Not now, because they have opportunities because of the the ecosystem in Europe being so lively. There's another 25,000, I think, more PhD students in that field. So there is talent in Europe, and that goes from Helsinki, where we backed a business doing Facebook advertising, all the way down to Italy or Spain, where we in the past have backed a gaming business, for example, or Rivalia in the private sales segment. So. A wide range of geographies and talent. Unfortunately, that talent is becoming a little bit less mobile towards the UK.
Yeah, is that a problem?
But and that is a problem that the tech industry has been complaining about. But still, I think again, a lot of these businesses also learn very early on to open new offices in different and to work virtually across different geographies. Across Europe, but also over to the US, because a lot of the businesses we back, for example, have an ambition to go into the US, and we help them achieve that. And so that ability to open offices where you need to bring the talent together is there, and we think it's perfectly feasible.
Is it impacting London as a tech scene at the moment, the lack of ability to actually move to the physical place?
Well, I think nobody knows how much more could be going on in London, but London is still getting something like 3x the amounts of investments that Berlin or Paris is getting, and I can say that as a Frenchman. It's still extraordinarily lively here. There's an ecosystem of entrepreneurs, investors, and businesses ready to embrace those technologies as well. That is really incredible. So we're optimistic about London's future.
You mentioned about how you backed a company that was helping with Facebook's advertising platform. Well, that begs the question, does Europe will it make its own Facebook or Chinese equivalent of like a WeChat or an Alibaba or a juggernaut? We had Spotify, it got into double figures, $20 billion is nothing to be laughing at, but it's still not the juggernaut of a platform that we've seen being built out of the US and China.
Right. Well, give it a bit of time. It would be my advice. You have to recognize that in the past, there's been a fraction of the level of investment in Europe that has occurred in the US. Despite that, there's extraordinary acceleration in terms of number of new companies reaching the $1 billion mark, so-called unicorns. I think there's about 50 that were created in the last 5 years in Europe. That's pretty good momentum, and those businesses are extraordinarily healthy. 60% are profitable. They are twice the size of the US equivalents, so they're doing well. So our feeling is Europe doesn't need to hide versus the US. There's more capital now coming, and we're contributing today with a little bit more to help build those businesses, and with the right timing and the right runway and the right help from the ecosystem overall, which is what our job is to do, to help those businesses, we're confident that it will continue those businesses will continue to strive. Some will sell, some will do an IPO potentially, some will combine with others. It doesn't matter. Those jobs and that intellectual property has occurred here. And will remain here in most cases.
The capital that's coming, we're seeing plenty of European venture funds opening at different size of tickets, different areas that they want to plug the gap. But where are you seeing that money coming from? Where are your LPs coming from? Are you coming from the US, from China? Is it European money that wants to be put into a riskier area?
Yeah. It's very broad. I mean, it's mostly Europe and US based. It's university endowments, it's foundations, not-for-profit foundations, it's pension funds, it's private individuals, family offices. It cuts really across a broad section of highly qualified investors that we're very proud of, and we're excited to help those businesses as well make the returns that they want for their own mission. through our fund, of course.
You talk of plenty of supply. Is there ever an issue that there's too much money coming too quickly? Are you fighting over the same businesses?
I would say there isn't in Europe yet. Fortunately, the investments have been concentrated across the whole life cycle of the businesses.
Okay.
And so you have a very lively pipeline of early stage businesses that have been funded by early stage investors. And then there's growth, early growth like ourselves, and there's opportunities for later stage growth as well.
That was Stan Laurent, partner at Highland Europe, speaking with Bloomberg's Caroline Hyde. Coming up, we've gotten complaints. That's the assessment Facebook COO Sheryl Sandberg recently gave when asked about the company's new ad policy. We'll discuss the bumpy rollout and what it means for advertising on the platform. Tesla drivers in one of its biggest European markets are increasingly unhappy. The Consumer Council in Norway says the electric car maker had the 4th highest number of complaints in the first half of the year. Drivers have struggled to reach Tesla's customer service. Others have complained of late deliveries. In response, Tesla says it's working to improve its customer service. Now, Facebook is catching some heat regarding new rules for running ads with political content. The platform has taken down many ads flagged due to the use of some keywords like Bush and Clinton. So what's the problem? The problem is that sometimes it has nothing to do with politics, like a Walmart promotion for Bush's baked beans. For more, let's go to Bloomberg Technology Sarah Fryer in Los Angeles. Sarah, can you explain this very bumpy rollout of this political ad rule? Why is it blocking seemingly innocuous content that's not even remotely political?
It seems to be a keyword filter, which is really quite a problem when you think about how many towns are named Clinton. It's one of the most popular names for towns in the U.S., as well as how common the word Bush is. I went through and found ads for everything from waxing salons to fried chicken to vacation Bible school free lunch for kids. All of these things were deemed political by Facebook and blocked. And I talked to one of the advertisers who was advertising a baseball night for families in a town called Clinton, and he said he's still getting that prompt from Facebook even after our story ran. So there are plenty of kinks to work through. I think it just shows how difficult it is to build an algorithm that can understand not just the content, but the context of that content, and whether something is political. It's definitely something that's hard for a machine to figure out.
So Facebook has made a lot of changes to its advertising policy, as has Twitter, but that really just seems to barely scratch the surface. In the 2016 presidential campaign, a lot of what the Russian trolls were doing was making fake profiles, spreading propaganda in a very organic way. So what has Facebook done on that front?
So there has been a lot of work that Facebook has done to try to figure out what's happening on the platform and try to prevent election interference in the future. They've hired up a bunch of people, they're working with experts, but mostly they're trying to explain themselves, explain to Congress what has been going on their platform that made it so hard for them to find this in the first place. And one of the things that makes this difficult for Facebook is they don't necessarily get the information from the intelligence community to figure out what to look for. So they're kind of turning up this operation by themselves and looking for signals, hiring people who have security clearance or background in security to try to be more proactive. Historically, in the 2016 election especially, they were very reactive to what journalists and the government pointed out was going on their platform. Now they want to find it first. But clearly it's going to be difficult. I mean, this company has more than 2 billion users, so many pieces of content to go through. It's really hard to build something that's reliable.
And speaking of explaining to Congress, they recently revealed this 747-page document to Congress that reveals some more details about the extent of relationships with 52 hardware and software makers, including Huawei, Alibaba, Amazon, Apple. So what more did we really learn about those dealings?
I think whenever I read Facebook's disclosures, you can sort of go through all the questions and remember a time when they didn't have to talk about this. Like when I was reading through the 747-page document, you can look at that list of device manufacturers that they set out there and question yourself, would they have done that if not for the news report about those partnerships? And you can look at the extension. They also talked about how they extended friend data access for some developers past the 2014 rule change. Would they have done that if not for the Wall Street Journal story about that behavior? So I think it's really important for Congress to keep asking questions and for us to keep asking questions. And then Facebook, they're trying to err on the side of transparency now. And whenever people do point out things that are concerning, they are starting to open up about them.
All right, Sarah Fry in Los Angeles, thanks for stopping by. Now that does it for this edition of Bloomberg Technology. I'm Selena Wang in San Francisco, and this is Bloomberg.